So, like always, going to be going over the trade that I took on May 28th, which is a Wednesday. There's a couple things that I want to point out on this trade that I took. I did have some live commentary in this trade as well, but the trade wasn't very long, so I'm not really going to play that audio. It was pretty irrelevant. The trade pretty much just went from entry to target, but I do just want to play it out so that we can talk about it and I can learn from it. And then I'm going to fast forward this as well. So, as always, here is our 5 minute buy side liquidity sweep level. It is at, I think it was 563, 21, 563. This did turn out to be a daily high. You can see on this chart, I'm kind of scrolling back and finding new levels to mark out. Now, I wasn't sure if we were going to keep pushing higher or not, but I wanted to have the levels marked out just in case if we did start going higher here. And nothing's different, I still wait for my 5 minute sweep. I still wait for my 15-second sweep as well. And then, like I stated in the last trade review as well, I'm not going to lock myself to fractal 15-second sweeps anymore, just because I have missed a trade in the past because of it. And honestly, the last 2 days, yesterday was a non-fractal sweep, and today was a non-fractal sweep. So I'm gonna let this fast forward a little bit more, and then I'm gonna pause and screenshot everything here. So you can see, just quick pause here. Let me pull out my snipping tool, and we can draw on this real quick. So as always, we have our we have our 5 minutes. Here's our 5 minute buy side liquidity sweep. You can see on the 5 minute chart, really nice sweep of this level here. The 5 minute candle pierces the high and then quickly starts to push lower here. You can see that. And then coming over to the 15-second chart, like I was stating before, a swing high or a swing low or a structure point in the market is any candle that the candle to the left and the candle to the right, the lows or the highs of that candle are higher or lower than that candle in the middle. And that can go for anywhere. So like technically, so our attention is over here on the right side of the chart. This would be a swing low because this candle's low is higher than this low, and this candle's low is higher than this candle's low. So this would be a swing point. And if you see, once we put this swing in, price comes in, sweeps it here, and then we get a short-term move to the upside. And then same thing here. This is a swing low point. Price sweeps under that low. We then get a double sweep, move a little bit higher, and then if you look right before market open, we sweep, we move higher. Now, every high and low isn't going to do this because you can see these levels here. We closed above and then just kept pushing. If the market was to do reversals off every single swing low and swing high, the economy wouldn't grow as a marketplace and price wouldn't move. It would just be range bound forever. So there are times when price does move a little bit more than normal. So sorry. So that's a quick explanation on Like I said, sell side, buy side, swing highs, and this is fractal. So this can go to this, for example, for me, I'm doing this on a 5 minute chart. You could do this on a 1 hour chart, 15-minute chart, 30-minute chart. Doesn't really matter. The same principles apply. Now, certain time frames, depending on how you enter in the market, is going to be slightly different. For me, in the way I'm trading, I've found the most success on 5 minute and 15 second. Something too that's also important is, and this isn't really ICT related. It could be, but it's not. I mean, I've been I've been watching, smart money concept or ICT videos for about 2 years now. I honestly really haven't watched too much of ICT's videos himself because he's just really hard to listen to and he rambles a lot. But something that's important is you should have at least two time frames you're working off of. You should have a higher time frame, and which is like where you're getting your levels or your POIs, your points of interest, where you want to take trades from, and where you would be targeting if you do take these trades. Those should be off of your higher time frame, which can be a 15 minute, an hourly, a 4 hour, a daily, a weekly, or a monthly. And then you should have your lower time frame, which is where you would be looking for your entry into the trade. You should not be working off one time frame. So, like for example, if I'm working off of a 5 minute chart, I mean, what are the chances that for this trade, for example, this 5 minute buy side sweep? I mean, what kind of confirmations can I look for off the 5 minute chart? The 5 minute chart is a pretty high time frame chart, so I'm not really gonna get proper confirmation. I might see, maybe I will see price will. Where is my cursor at? There it is. So maybe once we pushed up to this level, and then maybe once we came back down and flipped red, maybe I could have entered in short around here, you know. But I've noticed that having a lower time frame does help because you can actually find proper confirmations and you can get a better stop loss placement. Either way, though, not talking about that anymore. Here's our 5 minute buy side liquidity sweep. That's step one of a trade setup. Step two of a trade setup is waiting for a 15-second buy side level to be swept. So, like I was saying before, this is not a fractal sweep because the two candles after are not lower. This third candle here, or this second candle after this candle, made equal highs with it. And then the third candle, which is this candle here, this candle finally pierced the high and then started to move lower. Now, I was a little skeptical on this sweep just because it's pretty small in a sense. It's pretty minute, but it is there. And we did visibly sweep it right here. And we did find some kind of reaction. So as we start coming lower, we form our gap here. You'll see I set my limit here on the fill of the gap for a move lower, and my stop loss is going to be at the high. And you can see my target over here. This is my target because we are entering off of this current 5 minute candle. So this would be the current target based off the time that I'm taking this trade at. So I'll just resume it. You can see it does get pretty small there. You can see initially we tap into the gap, but we don't fill. At this point, I'm like, oh, maybe I fucked up. Maybe I should have just took it on the normal fill. But you can see eventually we do get that fill there. Now, like yesterday, I'm not really saving too much. I'm not really gaining too much profit or saving too much risk on a gap this small. But it's just a habit I want to get into of putting it on the fill so I can get like the best possible entry that I can. I can minimize risk and I can maximize profit potential without trying to hold a trade longer than I should be, or putting on too much size to try to make X amount of dollars. So you'll see here in a little bit, I do extend my target out a little bit. You can see I'm just kind of marking out the separate 5 minute candles. So you can see this is the current 5 minute candle that we were trading in. I got short within this 5 minute candle. So if you look to the left, this is the last 5 minute candle. You can see that's the low and that's my target. Now if I wanted to stretch for maybe the candle before that, it'd be this low here. And the candle before that, it'd be this low here. But we don't need to do that. This is already a 6+R risk reward trade. Here in a little bit, you're going to see me extend my TP out a little bit. Now, when I was taking this trade, I was about $413 away from passing the evaluation that I'm trading on at the moment. And so this TP was $390. So I needed about 2 more points to pass the account. So you'll see me, I extended out to 43 points and then I go to 42 points. Just because I wanted to just be done with the evaluation. I didn't want to like make 390 and then have to make another $20 somewhere. And have to take another trade and show up tomorrow. So you'll see I'm extending it out here. I'm kind of looking at, you see I'm looking at the balance, kind of like doing the math. And then you'll see me put it up to 42 and that will end up passing the account. Um, I mean, you can see, this was pretty much just an instant in profit trade. Not a whole lot of drawdown. Not a whole lot of consolidation. We do consolidate quite a bit here off of this level, but something that I do like to see. I'm just gonna take a screenshot of this one more time. Something that I do like to see when we are in a trade is that any new bearish fair value gaps that we create on the way down, I do like to see price trade into them and hold them. So you can see this was the first bearish fair value gap that we created after this initial one that I traded from. You can see price respected that, and then we start moving lower. We then create a bigger one here, and you can see price is also respecting that as well. You can see we get a small low closure inside, big candle to the downside. We then come back up, retest it again. Wicks do the damage, but bodies don't want to close inside. So that's something that I do like to see, and it's a good way to kind of tell if a trade is going to play in your favor or not. If you aren't really seeing any new bullish or bearish PD arrays forming in the antenna direction that you're trading in, then it might be a possibility that either it's going to consolidate for a while or it might end up in hitting your stop. So, if you look, this was just a phenomenal trade. It was a 6.46 or 6.5 R trade. I don't know why I keep doing like the points. The 6 R trade, 6.5 R trade. I was risking $65 to make 420. You can't really beat that. And like I come back to the risk reward when it comes to trading. You want to trade in a way where like you can be wrong multiple times and a winner will cover your losses. Just one winner. Not say you lose 5 trades in a row. You have to win 5 trades to be break even. You don't want to trade like that. At the end of the day, we are gambling in a sense. We are coming to the market. We don't know what's going to happen in the future. We're placing bets on expectations of what's going to happen in the future, and that is a gamble. You are betting on a uncertain outcome. Doesn't really matter what kind of confirmations, what kind of confluences. It could have worked yesterday, and it could have played out really nice, and then today the exact same thing could have showed up, and it might not play out. It's just the outcome of randomness that is in the market. So with that being said, when I did come in today, since I did have a pretty big win on Tuesday, I came into the day with the full expectation of taking a loss. Like I really did. I came into the market being like, I'm going to lose today. I'm going to lose a trade today. It's going to happen. So when I placed this trade, I had the expectation of it's going to lose. Now, is that a good thing or a bad thing? I can't really say because I am, like I've always said, I do when I do place a trade, I am expecting it to lose. So I am making sure that I'm not risking too much, or my stop loss is in a goofy spot. Now today, maybe I could have gotten away with putting it at the high, but that's not really where the 15-minute sweep happened. You can see we did have a sweep here, right? You can see we did have a sweep here, but this was before we took the 5-minute high. But you can see after we took this high, so pretty much this candle moving forward, if you look, we don't get any 15-second sweeps until here. So this, in my mind, is a safe stop loss placement. Now, I am going to do a quick overview on stop loss placements and what is considered a safe stop loss, or a safe high, or a safe low. We are at 16 minutes. I don't want this to go any longer than 20 minutes. So what I'm just going to grab this real quick as well. All right, let me just grab the whole 15-second chart. 5-minute chart's pretty. I mean, there's some highs and lows in there, but it's not too. I'll just grab both. So what I consider a safe high and a safe low is when price sweeps a high or a low and doesn't move any lower than that, or we form like a PD array, or we break structure off of it. So a good example of a safe low that I'd be looking at, I mean, they're technically all over the place, but you have to understand in what context you are looking at it as. So like, let's just use this 5-minute sweep that we had. I would consider this a safe high. I would consider this right here. This is where we're looking, is over here. I would consider this a safe high once this turns into a swing high point. So once this candle that we're currently on right here, once this candle closes, I would consider price to not want to return back to this level. Same thing goes for over here, right? You can see we swept this low out right here, right? Oh, you can't fucking see that. We swept this low out here, so here's the low we swept, here's the pierce. Once this candle closes higher than this low, I would consider this a safe low, and if anybody is long, this would be where your target should be, because price could retrace, consolidate, whatever, but if it never comes below here, it's still bullish, right? Because the liquidity has already been taken out of the market. Anybody who longed this move right here would have had their stop loss here. So once price comes down, they're getting stopped out. And then now the actual move can happen, because now the market makers have the orders to actually push price higher. And it does it a lot. It does it over and over and over again every day. You just have to train your mind to spot it. So, like I was stating, this was the safe high, because what did we do? We swept this high. Once this candle here closed, anybody who could have possibly shorted here, no, it doesn't look a whole lot like of anything, but we already failed to push higher. It's pretty much what you kind of want to see. We failed to break out to the downside. So anybody who is maybe shorting a breakout, they're stopped, they're underwater, they're getting pressured. Same thing here. Anyone who's expecting a breakout after we got this pullback, right into this gap here. We got this pullback right into this imbalance. Price starts to come up. You get a nice little pullback. Anybody who's buying over the break of this high, expecting us to push higher to the high days, they're trapped, they're underwater. And once they kind of get a chance to mitigate that loss, that's when we really start to push to the downside. So we are at that 20-minute mark. That's kind of where I want to keep the live streams at. But this was a good trade. I did pass the evaluation today. I'm up 3K. I'm up $3,004. Let me just pull up Let me just pull this up real quick. And this is how we looked. So I had a 57% win rate, 3.06 average risk to reward, which is great. Didn't have any losing days. Every day was green. And my profit factor was a 4.09, and it took me about 9 days. So I'm not going to be trading again until next Wednesday when I pay the activation fee for the funded account. So I'm going to take a week break, enjoy life, play the game, go to work, eat food. And till then, hope you guys the best. I'm going to be chilling. Like I said, trade smart, trade discipline, trade like you want to make money in the market, and trade like you want to stay in the market. Don't trade like today is the only day you can make money because the market's always going to be here. Don't rush the process. Enjoy the process. And at the end of the day, just have fun and always be around a community and have people to talk to.